we've had a good house price performance in Australia, and it's our view that that's likely to continue.
Welcome to The Business. Is NAB going to have to match new products from competitors such as long-term interest-only loans?
I think for us, the biggest thing that our customers want is good service. And they want us to look after them, to bring them with solutions and with ideas, and to be easy to deal with. Pick up the phone when they need us. That's the biggest thing our customers want. On the margin, there's sometimes interest in new products and what have you, but overwhelmingly what our customers want is good service and for us to be there for them when they need us.
Let me ask you this. Another of the big four is now offering multiple loans to owner-occupiers to cover a single mortgage. Are these more untraditional offerings set to further pump up house prices?
Look, I think we've had a good house price performance in Australia, and it's our view that that's likely to continue. And the big driver of that is the lack of housing stock in the country. And when you have supply that's constrained, and you have newcomers coming to our shores and young people who want to enter the housing market, that drives up demand. And so in and of itself, that's likely to continue to escalate housing costs going forward. And I think what we need to see in Australia is more supply, more dwellings come under the get shovels in the ground so that we have more choice for homeowners to be able to enter the property market. I think that's one of the single biggest challenges, policy challenges for the Albanese government in its next term.
Do you see house prices really taking off later this year if NAB's economics team is right and the Reserve Bank cuts by 100 basis points by September?
Well, they will certainly, I think, increase the spending power of buyers if we get to see that type of reductions in base rates. So, look, I don't want to put a point of view out there on what housing is going to do, but I think we're confident that housing is going to continue to be a robust asset class. And we're continuing to lend lots of money to both owner-occupiers as well as to investors all across the country.
The bank has noted a small rise in impaired assets and defaults, given what we've been talking about with house prices, not to mention the backdrop of an uncertain global economic outlook. Are you concerned that they will rise further?
We'll have to wait and see. There's kind of headwinds and tailwinds on this one. I think a tailwind is going to be, as we've mentioned in this interview, the reduction in base rates, I think, are going to be very positive, both for households as well as businesses, in terms of managing the costs that they're facing and helping them to continue to pay down their loans. But at the same time, we are dealing with a geopolitical environment that's uncertain, and that potentially is a headwind for us in Australia in our domestic economy. I would say that while we are seeing an increase in delinquencies and some increase in impairments, generally speaking, those are still at very, very low levels, and they're not out of the ballpark of what we would have expected at this stage of the economic cycle. And in the large number of cases where there is some distress, it's usually around delinquency and not being able to actually pay the interest. It's not that we see impairments, given that asset levels are still staying steady.
With NAB's economists forecasting a quicker and deeper rate cutting cycle than the other banks, and including a forecast of an emergency-sized rate cut in just under a fortnight, does NAB hold a level of pessimism about the outlook?
I don't think so. I think what it is it's highlighting the fact that the Reserve Bank's core measure of inflation, the trim mean rate, is now within its target band of between 2 and 3 percentage points. And given that there is significant disturbance outside of our country with obviously the US administration's stance on tariffs, potentially lower growth in China, which is one of our major export markets. And then even this morning we saw a flare-up in the Indo-Pacific with military interactions between Pakistan and India, these things on their own are a net negative to global economic growth. And so what does that mean? It means that if the Reserve Bank needs to reduce rates, it can, and it has the ability to do so. Whether or not they do reduce rates at 100 or 125 basis points over the course of the rest of this year, I think ultimately depends on how these headwinds and tailwinds interact. All in all, we think the Australian economy is going to do pretty well this year. We think we're going to see GDP growth of 2%, maybe a touch higher than that. We think employment levels are going to continue to stay strong, and as mentioned earlier, housing is also going to be constructive. So we'll have to wait and see. Our expectation is the Reserve Bank will do what is necessary to maintain inflation in its target range and be watchful of levels of unemployment. But they won't go further than they have to. So we'll have to see what the different headwinds and tailwinds mean for the economy over the course of the balance of the year.
NAB's business lending is facing stiffer competition from the other banks as well. Are you seeing increasing caution from business about taking on extra lending because of the uncertainty you've just mentioned?
Yeah, there's a couple of things working in opposite directions, actually. Today, as I stand here, we have the highest pipeline in our business and private bank than we ever had. And it's well up on this time last year. That's the encouraging news. Conversely, what we're also seeing is that pipeline is a little bit slower to settle than we would have seen in the past. And what that tells me is that business owners and businesses are looking to grow, they're ambitious to grow, and they want to borrow to expand their businesses, hire more people, potentially make acquisitions. But they're also conscious of what's happening around them. They may well have been waiting for the election outcome. They're certainly, I suspect, waiting to see what happens with the global trade and tariffs matter. And as soon as they have a bit more confidence and more certainty, I think they'll press the button and settle that pipeline. But I think they're being cautious, they're being prudent, and that's not surprising.
And so in terms of business lending, how does NAB plan to stop the other big banks from stealing its turf?
I think we've done a pretty good job on that to date. In the last half, we grew our share of small and medium-sized business lending. We bank over 27% of Australian SME businesses. We bank over 1 in 3 farmers and agricultural customers. So we're a big player in this space. We're a scale player in this space. In the last year, we've seen total business lending grow at a greater extent in the top end of town versus in SME. And there we've been a little bit more judicious. We've chosen to stand away from some transactions where the returns didn't match what we wanted to deliver for our shareholders. So that has seen us grow a little bit below system in terms of total business lending, but we're pretty comfortable with our position there, and we're thrilled that we're continuing to grow in our heartland, which is small and medium-sized businesses.
Finally, you brought up the election earlier. The Liberal Party has traditionally been the party sticking up for business interests. Is there a chance business will be forgotten now that the Albanese Labor government has been returned with such a strong majority?
Well, first and foremost, I'd like to extend my congratulations to the Albanese government on their election win and the strong mandate they received from Australians. I've worked with the government and Treasurer Chalmers for the last few years, and I know them well, and they do listen to the voice of business. And it was encouraging that Treasurer Chalmers himself made the point that in the next term of the Labor government, they're going to pay more attention to productivity than maybe they did in the first term. And it's my view that that's imperative. Australia's had a pretty good run over the last few years, but that's not been driven by improved productivity. And that's absolutely essential if we're going to maintain and grow living standards in this country. And we need productivity everywhere. We need productivity in housing. We need productivity in mining. We need productivity in energy so that we can deliver the minerals and the resources that the world needs to decarbonize. And then we can provide the energy, too, that the world needs, both natural gas as well as renewable sources of energy. And so we want capital to come to our country, not go overseas. And businesses want it to be easy to invest and grow. And so levers that will make it easier for businesses to grow are incredibly important. And it's our hope that we'll continue the dialogue with the Albanese government over the coming Parliament.
Andrew Irvine, thank you for joining the program.
Thanks for having me.